Hello, today is September 8th, 2020. Today the S&P 500 was down about 2.75%. You can see a live shot of the bookmap trading system here, which is showing you kind of the carnage, so to speak, that took place today. We've obviously had a much larger sell-off in the context of several days, but I wanted to talk quickly about what we saw happen today and just sort of our feel and view for things. If you notice on bookmap here, we have our levels are imported automatically. So when I say our levels, it's the SpotGamma trading levels are imported each morning automatically to Bookmap subscribers, and you can see these are the big levels that we noted on the day, and the biggest of which were the vol trigger and the put wall. Now the vol trigger overlaps the put wall here, so that's why you only see one of the labels, but if I hover over, you can see that vol trig denoted there. And so 34.20 was really a big level for us today, and our subscriber notes go out every day, and they tell you that, look, generally, if we're above that vol trigger, you can feel safe to buy dips and sell rips, and that's because dealers, in other words, options market makers, should be buying futures as the market goes down and selling futures as the market goes up, and that kind of keeps volatility somewhat squashed and keeps volatility in a tighter range. Under that vol trigger, that's our zero gamma flip point. That is where our system detects that volatility could really expand. And so the market today actually opened pretty much under that 34.20, and when I say open, that's the 9:30 open. And we also note that the put wall is here. So what the put wall is the strike that has the largest amount of negative gamma with it. So what is happening and what that's telling you is that there are a bunch of puts sitting here. And if the market opens under here, dealers may have to start selling futures in order to hedge this position as those puts become more valuable. So we have two situations here. We have that negative gamma trigger, and that put wall probably figures into that sort of gamma flip position. And so once we start selling off, the dealers are just going to ride this position out, right? And they're going to just keep pushing this thing. And if there's not a big force, a big strong market response to wanting to buy, then we're going to pretty much just kind of ride this thing down. And you notice that we stopped around the 33.50 area, which is a very big options level. But one of the things that should be noted is that when we're looking at negative gamma scenarios or negative gamma situations, you need to sort of, or I shouldn't say you need to, I should say that I particularly don't look at levels I look at levels as zones as opposed to strict strikes that I need to trade off of. And what I'm constantly doing is I'm watching the VIX and seeing how volatility is moving around, and I'm trying to swing trade in areas as opposed to off of certain strikes. So what I mean by that is 33.50 is a key level, right? But you need to maybe take your size down a little bit and consider having wider stops, because you can see here that 33.50 is a big level, but we're just really whipping around that strike all day, right? It was sort of a level that played in, and you could see it figured into the whole the trading day at many points. But the fact is that volatility is swinging, and options are being open and closed, and there's a ton of other traders who are not looking at options volatility at all and simply trading what they see on their screen in terms of futures or stocks. And so these moves have so much energy to them that it's very hard to be exact with the strikes that you're trading. And so I think you just dial the size down a little bit and try to capture larger movements. So the last thing I wanted to talk about here was the zero gamma level. So zero gamma level is where we detect the market is going to think that things are going to flip, and that will often become this support or resistance zone, as we were just talking. And you can kind of see that 33.70 was roughly that zero gamma area, and we did test or revolve around that level a little bit throughout the day. We did make one strong move to try to breach it, but it was quickly met by another big wave of selling. The VIX really took its highs out on the day today, and from my point of view, when you have a VIX that moved that much higher over the day, it's likely that a lot of puts were added and other negative delta trades, so that dealers would probably have to short some futures to hedge themselves out. So I think the market kind of tried to take a bounce here, and towards the end of the day, they had a little bit of selling pressure. There was a 500 million MOC market on close, which is a decent size, not that huge. And then some dealers probably had to tighten some stops up. So I don't think that the end of day was all that bearish, even though it kind of closed near the lows. But I think really the key is here that this directional pressure, when you zoom way out like this, you can kind of see it over the day. Obviously, this rally in the middle of the day felt like a pretty good rally, and like we might really make a run back to 3,400. It was stopped kind of dead But again, the key is those big directional swings when we're under that volatility trigger area. This is exactly the kind of movement that we would expect on a day like today. If you like more information, go over to spotgamma.com, or I am at SpotGamma on Twitter. Thanks.